Morning, Steve Free in Chicago with the morning grain comments. Well, we had a pretty big rally yesterday in the grains because of all the positive rhetoric and news coming out about a possible U.S. phase deal signing after the first of the year, and then China starts coming in and buying U.S. ag goods. Again, we don't have a shopping list yet, and that'll probably be a key for price movement. Now, we did see overnight prices about unchanged, beans up a little bit, wheat down a little bit as the market pauses for additional maybe fund buying that could come into the marketplace if there is a deal. Some people, though, yesterday were a little skeptical about what China's going to buy, when they're going to buy, and whether or not prices need to rally right now. We did hear a little bit of farmer movement yesterday, but for the most part, I think farmers have a wait-and-see attitude here in the U.S. Most have sold what they needed to sell to pay bills. Most have sold what their financial advisors are suggesting that they should sell, and I think most of them are waiting on the sideline to see higher prices. Again, if we break out above yesterday's highs, the next objective for March corn is around the 405 area. For March beans, it's 970, and for Chicago wheat, it's probably 570. So we'll see if we can test those levels on any positive news. Now, China did say that they will provide retaliatory tariff waivers to buy U.S. farm products on more of a regular basis. So that will help, I think, in what they want to buy. They also said they plan to restart purchases of ethanol by lifting or wavering trade in the war tariffs. They also said they're considering rerouting trade that currently passes through Hong Kong to mainland ports. That could enable around $10 billion a year in U.S. goods transshipped from the U.S. Also, China will make measures to ensure stable pork supply for upcoming New Year and Spring Festival holidays by releasing more frozen pork reserve and expanding imports. So again, when people are watching this closely, the hog market probably is the market that could benefit first and the most of any other market. So we're still trying to figure out what all this means down the road from a price standpoint. It's interesting in that people are trying to look forward to the January 10th USDA report. Some people that probably have more knowledge of this than me feel that USDA may not change U.S. corn and soybean crops as much as especially a corn crop, that what traders would like to see. The objective yield survey fields were harvested in November, so they really don't have any new data, and they'll be taking more from the survey from farmers than anything else. So we may not be that big of a change. Also, World Board may not increase U.S. exports because of Phase 1 deal until they actually know what the numbers are. That could be a little disappointing for the report for the bulls on January the 10th. For the month, wheat prices in Chicago is up 4 cents, while KC's up 10, and Minneapolis is up 18. Corn's up 5 cents, beans up 43 cents, meal's up 66 cents, and soybean oil's up 3 cents a pound. January crush margins are up a penny at $1.05. Oil share is up 1.5% to 34.8%. Again, drawdown in maybe Malaysian supply, increase in China buying of vegetable oils is helping the soybean oil market move higher relative to meal. South American weather looks good as far as Brazil is concerned. Most people are still looking at a crop of 123 million tons in beans versus 117 last year, and corn at 102 versus USDA's 101, and a crop last year of 101. In Argentina, people are lowering their soybean crop number down 1 million tons to 52. Last year was 55. Their corn crop still unchanged at 47.5, but USDA is at 50, and last year it was at 51. Again, yesterday funds were buyers of 15 wheat, 24 corn, 12 beans, 5 meal, and 6 oil. Right now we estimate they're long 37 wheat, short 60 corn, short 80 beans, short 28 meal, and long near record 96,000 contracts of soybean oil. So I still think the trend is up. Your risk reward is about the same right now, depending upon if there's a deal or no deal. End users should be getting some coverage for 2020, and farmers should be placing orders above the market to sell cash on a deal rally. As always, these are my thoughts and not those of ADM or ADM Investor Services. I am trying to check out the good boy, bad boy list for the next few days, so be good, and hope that everybody has a safe and profitable trading day.